Welcome back. With us right now is Dan Ullweiler, the president of Sterling Financial Advisors.
Good to see you again,
good to
Ken.
see you.
How are you?
Good. And
Are you staying dry?
You know what? I am. I like this rain. I mean, we have not turned on our sprinklers at our house. I probably since November.
I had to laugh last night when we were holding one of our seminars. I was talking to our waitress. I says, "We don't have to ask you if we want water anymore."
Yeah,
you
exactly.
know how they implemented that thing at the restaurant?
Yeah. So yeah, for us, it's been really good. The water bill has gone down, and
It's supposed to be another one tonight, I guess.
yes,
Huh?
exactly. Now, you had sent me an article yesterday, and it's
Very interesting, I thought.
Really good, yeah. And why the stock market under Trump will probably lag the market under Obama. And we need to kind of put this out there that it's not so much about who's in office, but there's trends here that kind of keep rolling over, right?
The economic situation when the president takes over has everything to do with how that market's probably going to perform under that president.
Yeah, exactly. And I know we're going to have a little graphic up that kind of shows this over time.
It goes over the last 10 presidents and how the market has done over here over the last, you know, if you look at some of these, over 10 years there was 3 down markets, but if you look at the trends going into that, Richard Nixon got caught up in Watergate, and so that had a negative impact on that. Gerald Ford took over, and so everybody was happy, and so the market did well. We got into the stagnation situation with the oil crisis and the Iranian hostages under Jimmy Carter, so that kind of had a negative impact, which led to the Reagan Revolution.
Yeah, exactly.
And so we can see here, you know, Bill Clinton, he from 93 to 2001, well, he left office right before, there's 2 things that happened, right before the dot-com bubble burst, and then 9/11.
Yeah, exactly.
And so George W. Bush inherited the dot-com bubble, and then that financial crisis in 2008.
Right,
so,
exactly.
And then Barack Obama came in. We had a nice run. This says 1%. Well, it's actually been 9% since he's come into office.
Oh, okay.
So I don't know that we're going to get another 148% is the problem.
Right,
you know, because we've had 8 years of nice growth in the market, cheap money, low interest rates. That money's had to go there. With President Trump, they're saying everybody's excited about taxes and things along that line, but as we were talking before, you know, some of his policies could create a trade war. You know?
Exactly.
And if interest rates start to go back up, that affects the market in a negative way. It affects the servicing of our debt. So a lot of this, it isn't necessarily, as you pointed out when we were talking prior to coming on, it's not necessarily the party or the president that comes in, as it is what's the economic condition when they assume office.
Yeah, exactly. And you know, you and I have talked before about interest rates and all.
Sure.
And there's always, you know, the double-edged sword, no matter what it is, even to the point of, you know, before at least Trump was elected, of course, there was a lot of talk about nationally raising the minimum wage. Well, there's a double-edged sword in there.
Sure.
If all of a sudden a place like Walmart has to pay everyone $15 an hour,
McDonald's or
what
whoever.
are the prices going to be for, you know, that bag of socks? You know?
Politically speaking, it's great to talk about that, but there is reverberations throughout the economy when you do that. And that just enhances, to be quite honest with you, the trade war with China because their labor costs are so low.
Yeah, exactly.
That's one of the things that are coming into play. And we talk about interest rates, and there's 2 segments of societies, the spenders and the savers. Right. The spenders want low interest rates, the savers want higher interest rates. So my particular clients, as we're working with retirees, tend to want higher interest rates.
Yes, that's true.
Well, I read an article one time that said that if interest rates go up 0.25%, it adds $400 billion to our debt service in a year. So interest rates can't go up too high, or it's just going to start taking most of our GNP to service our debt.
That's true.
The world has become addicted to low interest rates because of the debt that they have now.
And even someone like myself, on one hand, the part that I'm saving and my annuity and all that, I want the interest rates to go up.
Sure.
But on the other hand, I am someone who every 3 years I lease a new car.
Sure.
Well, I might have stellar credit, but you know what? If the interest rates go up a little bit, that's going to affect my next lease. So I want to. It's like, okay, go up for a while, then go down when I go get a new car. You know.
Well,
it's
like
the double-edged sword
for
myself.
It's the two-edged sword. And as I saw this chart, I thought it was very interesting because it wasn't the political party, but you had to realize it was the environment that they assumed when they came into office.
Right.
Okay. And so, you know, we had a real good run with Bill Clinton from '93 to 2001 because we didn't have any things, and he had changed some policies, made some adjustments to some of the entitlement programs, and it really boosted the market up. The dot-com bubble, or dot-com, started to flourish during that time. The internet was just getting really going.
Right.
And he left right before that bubble, so that doesn't go into his term of office, which is, you know, to his credit.
Right,
you know.
exactly.
But 9/11 brought a lot of that on.
Yeah,
you know,
it did.
And so, you know, people started to sit back and say, you know, the earnings that were, or the projections and the stock price we're giving these companies that aren't even making money was ridiculous.
Right, and that, in a way, is sometimes still going on, right? There are still companies that that if you looked at 30 years ago, you were like, no, this is not right. But nowadays, it's almost the norm. A lot of these tech companies that are still fairly somewhat new, but yet their evaluation.
You can still make a lot of money with tech companies. You can lose a lot of money with tech companies. For every Twitter or YouTube that you find, there's probably 10 or 15 or 20 that you never hear of that you lose money on.
Yeah,
so I mean, the risk is proportionate to the reward that you get, obviously.
Right.
You know, so, but, you know, just when people are saying, hey, you know, we're going to have tax breaks, they're going to do great for business, and this market's going to do well. Well, we've had a 148% run up during Barack Obama's stage. I don't know that we're going to go from 20,000 to 40,000.
Right.
You know, under Trump.
That's
you know,
right.
It's just that this, you know, it's just the economy right now.
It is.
You can't say that it's going to double under him.
And so it, you know, it does get to the point that, you know, you've talked about this many times. You know, would somebody, everybody's situation is different. Do you want something that's fairly safe, you can rest easy at night? Do you want to take a little bit more risk over here and just see what happens? And
well, as I mentioned in my seminars, when we talk to people, it's how we invest our money at age 35 is different than how we invest at age 65 or 70.
Right.
I mean, it should be.
Right.
Okay. You know, many times we'll meet with widows, and they come in and talk, and they've got, you know, 3/4 of their money in a stock portfolio that their husband managed for 25 or 30 years, and they have no clue. It's just that that's what my husband left me, and so I've just kept it.
Right.
Which, you know, there's probably ought to be some adjustment at that stage in their life, because you can't afford to lose it.
And we're not going to see the days of, I mean, the interest rates may sneak up a little bit, but long gone are the days of even
6, 7, 8%. I think so.
Yeah.
That's my opinion. That doesn't mean that I'm correct, you know, but I do think that the world, as I mentioned, has become addicted to low interest rates, and because all of not just us, but the world in general has accumulated so much debt that if interest rates were to go from 2% to 5%, the servicing on that debt would just be horrendous and would be a financial collapse.
Right.
And so I think, unfortunately, we all feel like interest rates are going up in the future, and they could be, but I don't see the days of Jimmy Carter when we had 16% CDs either. You know? I mean, those days will never come back.
Yeah.
You know? But even getting a 5 or 6% CD, I think is probably wishful thinking.
Yeah.
That
which is unfortunate. But
unless now, what could happen is if this economy takes off and we're able to pay down the debt, then interest rates could start to go up.
Right.
Okay. So if we can reduce we've got $20 trillion in debt right now and climbing. I mean, if that were to lower to 15 to 10, you know, because the economy is gone, we've been able to bring in more, okay, and we're able to reduce debt, then you could probably start to see interest rates starting to climb.
Yeah.
But until that debt is reduced, I don't see a lot of changes taking place.
Right. So
that's just my opinion again, you know.
And no, it seems to be pointing that way for obvious reasons. And you know, so you know what people do is if you want to rest easy at night, you're
do?
not going to get a whole lot of return, but you can rest easy.
Right,
you know?
right. And I get questions all the time at the seminar. How do I get a decent return and still protect my money? You know, you know, a lot of times as I sit down with people, it's not as how much money you make; it's how much money you keep that matters.
Right.
Okay. And so if you make 10%, but then the next year lose 20%, that doesn't do you any good. You know?
Yeah.
I always talk about hitting lots of singles without striking out, rather than trying to swing for home runs.
Right.
Reggie Jackson is the all-time strikeout leader in baseball.
Right. But he also had 500 home runs.
He had a lot of home runs, but he was always swinging for the fences, and so he struck out a lot. So in retirement, you can't really strike out a lot, or it's going to ruin your plan.
Yeah, and you've talked about this before, that you know, if you go swing for the fences and you lose 25%, well, it now takes 50% just to get back to where you were.
Exactly.
And it's a lot harder to make that back up again.
Right.
Yeah.
And our time frame is much different.
Right.
You know, I mean, if you've got somebody who's 75, you might have 15 years to do that up. But if you have a big crash at the first part of retirement or something, it's very difficult as opposed to the end of retirement.
You're right.
You know,
exactly. So I know you do seminars.
We do.
And
we had one last night, and I think we've gotten some dates. But
yeah, we got one date up here.
Okay.
I know you're going to send us some more.
Right.
And even if Dan doesn't have this particular date available, I don't know if you have any more spaces open.
Well, we
do
fill
more
up.
and more.
Yeah, we do. And if they call that 800 number, if a particular date is full, they can roll them into another date.
Exactly.
And so if that's our reservation line, and so if they call that number and the 15th is filled, then we can get them into another date.
Okay. So, and you do this up at Ruth Chris Steakhouse?
We do it at Ruth Chris in Irvine. We had a couple of guests from Leisure World there, or Laguna Woods, I guess, last night. So it was good. But we probably have 30 people at our seminars, and we don't try to get them too big, and we try to keep it more personal. So.
Yeah, that's nice, and a good location, obviously, and that's off Michelson, right?
Michelson and Jamboree.
Yeah, so not far away. Right. So give that number a call, and this is the reservation line, 800-563-1778 for the seminars, if you'd like to do that. Below there, right there, you can see there's Dan's office number, 949-859-8900. And obviously, if you call that number and you want to go to one of the seminars, they can put you in touch with the right people.
Or if they just want to come in for a complimentary visit. They don't have to go to the seminar to do that, but it gives them an idea of how we work with people. But either way, we'd be happy to do that.
Yes, located off Acero and right up in Mission Viejo.
Right near the Social Security office.
Yeah, so it's really easy to get to. And good folks over there, and they usually have little cookies or something like that. Am I right?
Hey, we have cookies and other treats.
Dan's baking in the back there, making some cookies. Good to see you.
Good to see you.
Thank you very much. And we'll see you again maybe in a couple of weeks or so.
We will.
All right.
Will.
Take care.
Take care.
We'll be right back.